So, the first half of 2025 may be underwhelming for most crypto asset participants, especially after the market run of form between November and December and the meteoric price predictions that have followed for 2025. The reason is simple. Global liquidity conditions may now be significantly lower than expected, turning markets risk-off for at least the first half of the year. If you are not familiar with the concept of global liquidity or Bitcoin's relationship with it, I will encourage you to watch my other video explaining the asset's recent price action. It should pop up here, and I will also link to it in the description. For TikTok, I'm going to have it in the comments. One of the major drivers of the bull market thesis for crypto has been that as the Federal Reserve, which is the US central bank, bolsters economic liquidity with interest rate cuts, some of this liquidity will flow into the crypto market, bolstering asset prices. But macroeconomic conditions appear to be changing rapidly as the Fed hinted in December 2024 when it decided to halve its rate cut projections for 2025. At the time, the reason for the sudden shift in the Fed's stance did not appear clear, but the picture may soon become clearer with data releases expected this week. In short, inflation appears to be on the rise again. At least this is what forecasts for the producer price index and the consumer price index data slated to be released this week suggests. These measure changes in prices from a producer and the consumer perspective. Notably for the PPI, economists anticipate a 3.3% increase in December 2024, up from 3% in November. At the same time, the CPI is expected to have increased to 2.9% from 2.7%, farther away from the Fed's 2% target. In simple terms, this does not bode well for risk assets like crypto and stocks, as higher inflation means less chances of near rate cuts and lower liquidity for longer. So what is driving this rise? At least one expert I spoke to while writing a report for the Crypto Basic today pointed to Trump. First, with the business optimism his election victory sparked, and now with the fears around threatened high tariffs on Chinese goods, which could send the prices of these products soaring. But this issue may not be limited to the US alone. For example, Germany has recently seen a significant increase in its CPI. For Bitcoin and the broader crypto market, this is likely to mean muted price action for the first part of 2025, save for a major policy win in Trump's first few months in office. This is because many banks now believe interest rate cuts are increasingly less likely, with some erasing all hopes for one in Q1 and others like the Bank of America in fact now believing a rate hike is even more likely this year. There have notably been warning signs of this, with last week's jobs reports beating expectations with a huge margin. Let me know what you think about recent developments in the comments.